G'day there. Welcome to the closing bell. I'm recording this on the 17th, on the Friday, about 1 in the afternoon. ASX down 50 points, had a pretty bad week. You shouldn't be too surprised if you watched last week's installment, and I'd recommend you do watch that, where I give a very detailed look at the big picture setup in stocks, S&P 500, ASX 200, and why I was turning more bearish. Now, this week, I'm actually increasing my conviction further. Things are playing out quite nicely, but there's still key levels that need to be broken below before I can become, really completely 100% bearish. So it's important what's going on. I think it's worth just recapping a few things to give you a sense of why I think it's time to be a bit nervous what's coming next. So this is the US 2-year bond yield chart. It's only showing you the last few months, just to give you a sense of what's actually happened in the past. We've gone from 0% rates up to over 4%. So this is what the 2-year rates have done, an explosive move. That's why stocks are struggling so much. Now, in the last few months, we've seen a rally in stocks. People thinking the terminal rate's in, growth is going to come off the boil. They'll cut rates quickly. And I think the market got a bit ahead of itself. So rates in the 2 years went from about 4.8% down to nearly 4%, despite the fact we had rates still going up, and the Fed has actually just increased rates to 4.5 to 4.75% right now. So to expect that the average yield over 2 years is going to be around 4%, boy, they must be expecting a lot of rate cuts coming soon for that to be correct. And I think the market has sort of woken up to itself. Those inflation PPI figures bouncing back, looking a bit rough. It could be higher rates for longer, even if we're near the terminal rate, that they might need to keep rates higher for longer. So those 2-year rates, must adjust higher. Now, that's just from February, that those 2-year rates have gone from around 4% to the current level, 4.67, 4.66. That's a big move, a big adjustment in the market's expectation of rates over the next couple of years. And stocks have been fairly resilient, I must say, in the face of that move over the last few weeks. But some cracks are appearing, aren't they? And I was giving you a good roundup last week, so I won't go into detail like that this week. So do watch that video if you haven't seen it. So let's just have a recap and look at what's happened over this last week. So this is the daily on the S&P 500. The last week's trading really is just this little section here. So not too much you can read into that. It had an attempted rally, which turned back down. So we really need to see a bit more downside to start increasing conviction that this thing is falling over. The thing I want you to note is the daily trend getting close to shifting down. And if we just look during this sell-off from the all-time high, the moments when the daily trend turns down, and what's happened afterwards. So obviously it's been pretty good at those moments when momentum has had a pretty big shift to the downside. And the key point being that we are in monthly downtrend, but weekly uptrend, and currently daily uptrend. So that's the situation we've been in. Of course, before things can really go bad again, from the monthly downtrend and the weekly uptrend, obviously the first sign will be the daily downtrend. And this is the thing I want to point out. When we have that monthly downtrend, there's a higher probability that those switches in daily trend will turn into something a bit bigger and could potentially lead to that weekly trend turning down. And if that happens, Well, you've got the monthly, weekly, and daily trend pointing down, and that's lights out. So we're not quite there yet, but we're on the edge of that shift. Bad night. I mean, potentially the US had a bad night last night, and you know more than me. If it did, that's when we'd be shaping up for next week being potentially very interesting if it did do that. And I gave you last week that line in the sand below 39.50. That's when the momentum to the downside should actually pick up steam. And we know it's pretty dangerous if the bottom of the whole correction gives way. So it's on that edge of looking bad, but we're not quite there yet. So I really do have lines in the sand, the 39.50, and also that high from a few months ago, which I explained last week. That's around 43.50. So they're my lines in the sand here after the last year and a half trading. Above there, I'm expecting a pretty sharp move to the upside. Below 39.50, momentum can really turn down. Now, how long is it going to take before one of those levels gives way? I don't know. I'm leaning towards this level being the one that comes under threat based on what the interest rates are doing. And I really think stocks should be lower based on that, but they've been holding in there pretty well so far. So I'd say the risk is to the downside here. And just increasing my conviction, I guess, compared to last week. So moving on to that ASX 200, and last week, if you watched the video, you'll remember I was pointing everything out to you, describing why I thought, watch out here, it could start to sell off. And this is the week that we've just seen. I guess one swallow doesn't make a summer, but that week now confirms a weekly sell pivot, which is the first thing I really needed to see to increase my conviction. So you can see the highest price there, weekly close below that low. I've got the weekly sell pivot in place from a pretty dangerous spot, as I explained last week, with the all-time high still not under threat yet, even though we got close. So looking at that whole correction over the past year, I'm looking at the buy and sell zones of that as the areas where I expect to see reversals and movement back to the point of control. So that's just below 7,000 in the ASX. And we've already had a few of them. That move there back to the point of control. This move here back to the point of control. Then we've had that January rally, which really caught a lot of people off guard, took all those shorts out of their positions. But now we have the weekly sell pivot, and the odds are increasing that we could see another move back to that point of control. And look below there, watch out, who knows what can happen beyond that. But let's take it one step at a time. And the weekly uptrend is still in place. So you've got to, accept that. Maybe it's going to be short-term selling and then turn around. You've just got to go roll with the punches, I guess. I was quite bearish here. I told you all about this and was thinking it could actually breach and have a bad move, but it found support, created that weekly buy pivot, and then was off to the races for a month. So, the heat is coming out again. And look, what happens in the US is going to be all important, but we've now got that sell pivot in place. Until I see a weekly buy pivot, I'm going to stay bearish, and really above the all-time highs where I can really switch my view. Until then, I'm thinking there's an increasing odds that we will revisit that point of control. And look, there is a chance that that could be the beginning of another big wave to the downside if we're looking at sort of an end of bull market move, big sell-off, back up into the sell zone, and then the next wave down. So it is heating up. It's getting more interesting, but boy, it's a tough old market. I'd love to be just sending out lots of buy signals, but we just have to accept what we've got. And really, it's just that warning to you to be wary out there. You don't need to be racing after things. You've got time on your side. And while the momentum's down, you want to be wary. The aggressive traders could be looking to get short. I won't tell you the exact levels. You'll have to be part of my service to know that. And we can go from there. But things are shaping up as I expected last week. And if the selling continues, well, it could get a bit messy if major support levels are broken. All right, well, that's enough for this week. I'll come back with more next week. Cheers.